terms of portfolio activity, we exited industrial gas provider Nippon Sanso and material handling systems by Daifuku. This is in view of better opportunities elsewhere. We also exited a position in Heiwa Real Estate, which is a stock that we held over the years, and we've seen improvement in shareholder returns, partly due to engagement. And we took this opportunity to take profits in view of limited further upside in terms of shareholder returns. And we have used the proceeds from the sale of these stocks to add to quality stocks, as we've seen their valuations become more attractive in recent times. In some cases, declining 20 to 30%. So we are using this market volatility to recycle capital within the portfolio. During the period, the return for the trust was 2.9% in sterling terms, while the benchmark TOPIX rose 3.4% based on preliminary numbers. What helped were stocks such as semiconductor tester maker Advantest, specialty chemicals maker Shinetsu, both of which rose on expectations of improving outlook for semiconductor end demand. Advantest also benefited from expectations of AI-related demand kicking in from such as ChatGPT, because Advantest, they provide semiconductor testers for high-performance computing chips, which are used for these applications. Beer maker Asahi Group also rose on the back of better than expected results, as beer demand remained resilient despite the price hikes we've seen in recent times. And it helped that the company continued to make investments in marketing and product development during difficult times of COVID, and these investments are starting to bear fruit. On the flip side, non-life insurer Tokio Marine fell following the collapse of banks in the US, but the impact on Tokio Marine is likely to be limited in our view. Doceo share also fell on concerns of weakened demand and also rising costs, but we believe that the company is able to pass on cost inflation. The last 3 months has been a volatile period for the Japanese market. This is really due to mixed views in the economic outlook, with recession fears kicking in. In February, we saw Kazuo Ueda chosen to succeed Haruhiko Kuroda as the governor of Bank of Japan. In parliamentary meetings to confirm his appointment, Ueda suggested that the central bank would maintain a loose monetary policy until a sustained achievement of its 2% inflation target comes in sight. However, we are monitoring carefully if he will signal any changes at his first policy meeting as the governor later this month. So while macro continue to dominate over micro or company-specific efforts, it was positive to see our holdings continue to make efforts to increase shareholder value by relooking at capital allocation and other measures. And this is really partly due to engagement in the past. Just to give you an example, real estate developer Tokyo Fudosan announced the sale of its largest real estate asset by book value as part of its restructuring. And this is actually a property that is located in Tokyo's Ginza district, so it's a prime asset. But the company determined that it could improve its asset efficiency by selling the property. In terms of the outlook, we continue to see some of the issues from last year easing. So yen has strengthened after a sharp weakening against dollar that we saw last year. Input prices have moderated in some cases, with signs of further cost deflation in some areas. And finally, China's reopening has led to a recovery in demand in some areas. Of course, we are continuing to monitor risks of the risk of underestimating the persistency of inflation and geopolitical tension, but we continue to believe that better run businesses that we hold in the portfolio should over time outperform, which is why we stick with well-run companies and continue to engage with these companies through active engagement. And in terms of engagement, the Tokyo Stock Exchange is encouraging companies that trade at low valuations to improve their capital efficiency. And we feel that with this tailwind, we feel that our holdings have become more proactive in narrowing the discount of their share prices and also more receptive to views of shareholders like us. Just to give you an example, mortgage guarantor Zenko Kosho recently announced a new midterm plan, and this is a stock that we've been engaging with for many years with the management teams, and we felt that the new plan that was announced was a meaningful step in the right direction, in that the company commits to a minimal ROE target, which is based on not only growing earnings but also on capital discipline, which includes increase in shareholder returns. So it's positive to see that some of these engagement efforts bearing fruit, and we continue to actively engage with our holdings in the portfolio.